and it's time for Talking Numbers. That time of the year again. My next guest says that about half of all U.S. mutual funds end their fiscal year between October and December. The money managers tend to sell stocks with large losses to clean up the books by year end and reallocate. He says that window dressing, as it's called, causes downward pressure on the markets on stocks that are trading near their 52-week lows, and that once this pressure subsides, these stocks usually rebound. How do you want to cash in on this pattern? We're talking numbers right now with Pankaj Patel, Managing Director and Global Head of Quantitative Research at Credit Suisse. He joins me on the telephone. Pankaj, always nice to have you on the program. Can you walk through how you select which stocks will likely rebound? What criteria do you look at?
Thank you, Maria. Yeah, we select our stocks in large, mid, and small cap universe using criteria. The first one we use is that stock has to be trading near 52-week low, or it should not be, it should be below 25% of their 52-week high. Then we eliminate stock if they have experienced a recent reversal. So if their stock has moved up recently for some reason, we remove the stock. And then the final criteria is we look at the valuation. We look at valuation both absolute level and relative valuation relative to the industry.
So what are you seeing right now? Using this criteria, can you name the top three companies on your list of large, mid, and small cap lists?
Yes. So first, the large cap, we see Walgreens, SunTrust Bank, and Ameriprise Financial. In the mid-cap, the three top are New York Community Bancorp, Endo Pharmaceutical, and Jefferies Group. And in small cap, it is Geo Group, Vico Instrument, and Poly1 Corp.
So just to be clear, we could see these stocks worsen before the rebound, because here we have the books closing for the mutual fund companies any day.
Yes. So yes, as we talked before, so from now through end of the year, more than 50% of the mutual fund year ending is there. So this stock can go further down, but most of these will come back in first 2 weeks of January.
All right, so you really want to look for your entry points then. I mean, you lump all the stocks meeting your criteria into one basket. How do the portfolios perform versus the S&P indexes?
The portfolios, like last year, just to give an example, last year in large cap, the portfolio of this selection criteria outperformed S&P 500 by 5.8%. In small cap, it outperformed by 3%, and in mid cap, it outperformed by 1.7%.
I see. So just to be clear here, these stocks you expect to weaken. That's the bottom line over the near term, and then a pretty good rebound in January. So investors really need to study those stocks to see what the best entry point is.
That's correct. So investors also, they should think as a portfolio of these stocks. So if any one stock can go either way. So as a portfolio of stock meeting these criteria, investor can take advantage of the institutional investors' behavior using the technique we talked about.
So what's the bottom line here, Pankaj?
Just bottom line, look for stock which are trading near 52-week low. Make sure they have not moved up recently, and then make sure these are still value stock, and then hold them as a basket of stocks.
I like that strategy. That is a great strategy. We got a market that's up 339 points today, Pankaj. Any thoughts on what went on in this big rally on the heels of the EU developments?
Well, as your previous guest was discussing, this is just we need more details, but looks like some positive moments there.
Okay, we'll leave it there. Pankaj, good to have you on the program as always. Thank you so much. Pankaj Patel joining us from Credit Suisse.